Trump recently said he expects the negotiations with China to take another 3 to 4 weeks. It's very notable that you have midterms coming up in 2026. So these guys and girls are on the clock. They have to start moving. They have to start making decisions. Time is not their friend, because at the end of the day, politicians care about getting reelected. There's a lot of people around Donald Trump and on Team Republican that all they care about is getting reelected. And so that's why they don't have a ton of time. They're not willing to crash the financial system. They're going to find the liquidity necessary to continue to kick the can and keep this show on the road. And again, we've seen in the past how Bitcoin reacts to liquidity. When you have something that is the scarcest thing you could possibly own, that has an absolute fixed supply, it doesn't matter how much demand wants more Bitcoin. You cannot make any more of it. All right, let's get to some questions. And then I'm a busy boy nowadays, so I got to, I don't have unlimited time today. Sorry, let me find my questions. For those that don't know, you can ask questions in the chat, in the live chat. And my team is here with us, supporting us as always. Shout out to the squad, and writing them down for me in a document. So by the time I'm done ranting and kicking and screaming about macroeconomics and geopolitical alignment, I can answer. Okay. So we're at the 45-minute mark. I'm going to try and blitz through questions and be out of here before the top of the hour. Okay. Hopefully the show helps you guys really understand what's going on at the highest level of financial markets and how it could or could not impact Bitcoin. Okay. Macro and markets questions. Are we going parabolic in April? Listen, I'm not the biggest fan of price predictions in Bitcoin. The reality, if anyone tells you they know what the price is going to be or when we're going parabolic or blah, 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 like they're lying to you. You know, part of being human, part of this universe that we all share in, being alive right now in this moment. The past we cannot change. The future we do not know. That's it. That's the law of the universe. Okay. So the future I do not know. Anyone that tells you they know the future is either a time traveler and is defying the laws of the universe, or a liar. Either way, not really like, so I don't listen. I think over the long term, I'm very, very excited about Bitcoin. That's what I'll say. I'm not going to sit on here and make price predictions. Why is Tether buying those treasuries? Listen, as a stable coin, so a stable coin is like a full reserve bank, right? So a stable coin, you know, like Chase Bank also buys treasuries, right? Now, Chase Bank operates in what's called fractional reserve. So they're only holding a fraction of the deposits that their customers give them. Tether is the same thing, but they're a full reserve bank. So they're taking the deposits from those that use Tether, and they're buying this dollar-denominated debt instrument in treasuries. So think of Tether like a full reserve bank, just like, you know, another bank, but they just don't run fractionally. And, you know, they're very by the book in that way. It's not a very complicated idea, is that, you know, people want to have a dollar stable coin. We're going to take their deposits. We're going to put it in liquid, reliable, dollar denominated treasury instruments. If the Fed prints more money and buys bonds, then that's good for Bitcoin nominally. But in actuality, the dollar is just getting weaker. So in real terms, we aren't really getting richer. Thoughts? That's generally true, with a caveat. Let me see if I can pull up some charts to support what I'm about to say. So what this viewer is asking is a really phenomenal question, and it's a concept and some terminology that we've been using on the show, and I want to make sure people understand. There's going up in dollar terms, but the reason that that's not going up in dollar terms, the reason that's not very interesting is this microphone has gone up in dollar terms. This microphone's gone from, let's say, $100 to $200. My iPhone's gne up in dollar terms. The iPhone 1 was maybe like $300. Now it's like $2,000. This water bottle's gone up in dollar terms, right? Inflation is going up in dollar terms. Eggs, gas, energy, housing, cars, education, Bitcoin, stock market, everything goes up in dollar terms because, to this viewer's point, the dollar is just getting weaker. The more they print, the more they debase. The dollar has just historically gone down, gotten you less real stuff. Okay. Now, is that impressive? No, everything. Now, what's real terms? Real terms is, what about Bitcoin versus housing? What about Bitcoin versus oil? What about Bitcoin versus the stock market? Now, that is interesting. In that, I want to find a chart. Here we go. Perfect. Sorry, I really like you guys. Well, you guys told me you like the visuals. So I love this website. It's called inflationchart.com. Encourage you check it out. So we'll see Bitcoin as measured in house price. So this is not Bitcoin measured in dollars, because to the viewer's point, everything goes up in dollars. That's not cool. Are you up in housing? Are you up in barrels of oil? Now that would be cool. Okay, right? And you can see Bitcoin is up tremendously in housing. So actually what I want to do is let's do housing in Bitcoin. Here we go. Okay, let's turn that off. Turn that off. So what you're seeing is, okay, look, in 2011, one median house in the United States was 1.8 million Bitcoins. Okay. You'd have to have 2 Satoshi stacks to get a house with Bitcoin in the United States in 2011. Now, a median house in the US is only 4.7 Bitcoins. So the world has gotten incredibly cheaper in Bitcoin terms. Bitcoin has outperformed housing by a lot. Okay. So the idea is, just because you're holding Bitcoin, life around you gets cheaper, not more expensive. Okay. Let me just show you guys something. If you were to, do they just have the dollar in here? Nah, shoot. The point is, if you were to just hold dollars, your life gets incredibly more expensive because the dollar gets weaker, right? Housing gets more expensive. Food gets more expensive. Oil gets more expensive. Energy gets more expensive. Going to college gets more expensive. Traveling the world and vacations get more expensive. Everything gets more expensive. Now, the question is, in real terms, if holding Bitcoin, everything has gotten cheaper for you. Okay. Now let's go from housing and let's go to consumer price index. Look at this. We'll do logarithmic. It's just come down. It's just come down. Let's do oil. Bitcoin has outperformed oil. Look at oil crashing against Bitcoin. You can pick anything you want. Big Macs. What about food? Groceries have gotten cheaper in Bitcoin terms. Oil has gotten cheaper in Bitcoin terms. Does this make sense? So this is a very long-winded and visual answer to your question. But the initial question was, if the Fed prints more money and buys bonds, then yes, that's good for Bitcoin nominally, but is it actually good in real terms? And my answer to you is, listen, the thesis for me is really this. You can make more of anything except Bitcoin. Like, everything else in the world theoretically is abundant. What you want to do theoretically is store your time, energy, capital, labor in something that no one else can make more of. It has to have like a physical constraint so that no matter the demand, it can't expand and inflate. So guys, like, if we keep growing the global population, we're going to keep making more houses. Housing theoretically is abundant. Now, some housing isn't. Like a house on a specific beach in Miami might perform well because you can't make that many more of them because there's only so much of that one beach. But in theoretic, like just high level housing, we can make as many houses as we want. We can make as much food as we want, right? We could find way more oil. So the idea is, Bitcoin could outperform anything because it's the only thing that you can't make any more of. Okay, next question. Is there another weapon of choice than tariffs? What would that be in your opinion? I mean, what we saw in the Biden administration was they just took Russia's stuff. The most extreme violation of property rights I've ever seen. They just said, oh, nice treasuries you have over there. Those are now ours. That happened. Like, let's just remember the Biden administration literally did that. They just, the largest commodity producer in the world, the United States just said, oh, nice time, energy, effort, labor that you have here. That's now ours. Go fuck yourself. I would say that was a weapon that further accelerated this idea that U.S. treasuries are no longer the world reserve asset to store your capital. That's a bad idea. So that was a weapon. Trump with tariffs, another. I mean, it's just this idea that like the post-World War II economic alignment is slowly fading off. And, well, it was slow. Now it's rapid. And we're entering a new paradigm. When will the China stimulus money printing start to affect Bitcoin's price? This asset is moving more towards a global asset versus U.S. market-tied asset. It's a good point that Bitcoin is a global instrument. It is sensitive to global liquidity. It is not an asset that is confined to any borders. In particular, this question is referencing the United States. So it's a very profound point that Bitcoin is the most accessible, most freely traded, 24/7 global instrument. Anyone can download an app on their phone and participate in this market. Can't say that about gold necessarily. So pretty fascinating. And when will China start printing money? I mean, I've talked about this before. When the US prints money, everyone prints money, because part of competing in the export business and producing stuff to be consumed in global trade requires a weak currency. So if your currency isn't getting weaker with the dollar, then you are losing a competitive advantage in export and in production and in manufacturing. So when the US prints, everybody prints. Okay. Also, if the US is changing this global alignment and global trade, and they're saying, we're going to produce stuff, we're going to stop running an account deficit. By the way, last administration just said, oh, nice treasuries you have over here, those are ours. Fuck you. The fact now people, foreigners are selling their US stocks, selling their US debt. We just saw that chart with Tether buying, China, India, Ireland, sell. And so in order to finance themselves, they're going to be selling US instruments, and they're going to be buying things like gold, Bitcoin, and they're going to be printing money. Will Bitcoin volatility and drawdowns be less substantial? I've always considered Bitcoin drawdowns to actually be a reflection and a function of how high it's gone. So, for Bitcoin to go down 80%, to me, that speaks to just how high, its all-time high was, because a market can go from, when I first got into Bitcoin, I watched Bitcoin go from $50 to $1,200 and then came all the way down to $250. And yes, $1,200 down to $250 was a long way down, but it was only a long way down because it went from 50 to 1,200 in the first place, So I think Bitcoin's drawdowns are a function of its draw ups. And do I think that Bitcoin volatility's dampened and gotten lesser over time? The larger the market gets, there's both It's harder to move. I mean, it's a $2 trillion asset almost. It's much harder to whip around like a rag doll than it was when I first got involved in Bitcoin. But also, when you have a larger market like this, you have more sophisticated market participants. So volatility has come down. It's dampened. Do I think it's gone? No. Do I think that we should expect, more volatility? Probably, yeah. And do I think drawdowns are over? Definitely not. Definitely not. But that's because I think, Bitcoin has the potential to go so high. Do you still see a bear cycle with all these new treasuries and the ETFs? Yeah, I think bull and bear markets are more human psychology at the end of the day. I fundamentally believe that. So I don't think there's no asset that's immune to the cyclical nature of humans. Do you think we will see another executive order 6102 like 1933, but with Bitcoin as well as gold? The reason I don't think that we will see one with Bitcoin is because Bitcoin solves so many of the issues that gold has. Gold, in my opinion, failed as a monetary instrument because you needed to rely on some third party to achieve transactional finality. Okay. What do I mean by that? If you operated in a local economy, just, 10, 20, 30, 40 people, and you could go to your local butcher and exchange physical gold coins, or, you can go to get your hair cut and exchange physical gold coins, and you were transacting physically with the metal itself. Gold was fine. Worked no problem. But if you need to scale an economy to billions of people globally, you need to be able to order DoorDash. You need to be able to remit money around the world. You need to be able to buy something on Amazon on the internet. You can't use a physical metal. Okay. So then you had to deposit your gold with a bank, with a company, with a government, and you had to rely on a central party to achieve transaction finality. What Bitcoin inherently solved is it's both an asset as if it were a physical metal, but it's also a network. It's also a network. There's Bitcoin an asset, there's Bitcoin a network. And that's this massive aha moment where Bitcoin can achieve transaction finality without the reliance on a central party. You can use a central party if you want, but you don't have to. And it's for that reason that Bitcoin innovates materially over gold, introduces something to a monetary asset that we've never seen before. On top of that, that is the reason that Bitcoin is so well distributed with the individual, is that Bitcoin can be self-sovereignly held as bytes of data. So, you could executive order confiscate gold because it was all held as deposits in a financial institution, in a company, in a bank, in a government. All Bitcoin, like go up and pull up how much Bitcoin is on exchanges, on central parties versus held in a non-custodial manner, whether that's cold storage or just self-sovereignly by individuals. So the idea that Bitcoin as a broad asset class could just be confiscated, I don't believe that. I don't believe that's possible. It was possible with gold because gold was already deposited with governments. You couldn't use gold without the help of a government. Bitcoin, that's not the case.